New hospital price data from Texas shows a minor heart procedure costs about $5,499 if you pay cash, compared with roughly $9,773 when you pay with your insurance. The one thing that's supposed to lower the amount that you spend at the doctor's insurance is actually raising your total bill in many cases. This is largely unique to the United States. You don't really see this in other countries. And in this video, we're gonna break down why it happens. We'll dive into the 3 reasons why it's becoming more common to pay more at the hospital if you have insurance, whether insurance is still worth it for the average person, and options you have if you end up with a massive hospital bill. Let's dive in. If you've seen any of my videos, you've probably heard me mention the Charge Master. It's basically the hospital's sticker price, the starting price before anyone negotiates anything. The Charge Master is the first reason why hospitals charge more if you have insurance. At one hospital in Florida, a 1,000 milliliter bag of sodium chloride, just normal saline, was charged as much as $26,667.03 to somebody who had insurance. At another hospital in Oklahoma, that same bag was charged up to $6,837.65 to somebody with insurance. So what's actually going on here? Well, 2 things. First, those high prices make the discounts look bigger. Let's say a hospital lists an MRI at $5,000 but agrees to take $2,000 from your insurance company. The insurance company can now tell the patients and the company who provides insurance for those patients that they got a 60% discount. Even if somebody else went to the hospital, got that exact same MRI, decided to pay cash, and only spent $1,600. Second, those high prices also make hospital losses look bigger on paper. I'll explain that. If a patient gets billed $26,000 and can't pay, the hospital can typically write off that full amount as a loss and not have to pay so much on taxes. Definitively, the Charge Master isn't really about what things actually cost in real life. It's more like a starting number used for negotiation and bookkeeping. The problem is if nobody's negotiating that number down for you, then you end up getting stuck paying a much higher price than if you didn't have insurance. The second reason why your medical bill might be higher if you have insurance versus somebody who just came in and paid cash is actually kind of a valid one, especially compared to the next one. Take a look at this chart. When you go to the doctor's office with insurance, it costs the hospital this amount of money to have you there. When you pay with cash, most of that admin work just disappears. It's just you swiping your card or paying with your phone. The hospital doesn't have to do as much to get their money. Our multi-payer system in the US means that hospitals have to manage thousands of different insurance plans with different rules for billing, approvals, denials, and appeals. If insurance does deny you, it also harms the hospital because they don't get paid immediately like they would have with somebody paying cash. So to put it concisely, sometimes a hospital is willing to accept less money for the exact same procedure because somebody's gonna give them cash right now versus they have to go fight with an insurance company to get it. Okay, the third reason. So in theory, insurance companies are supposed to be on your side when it comes to negotiations. The idea is they use their size and negotiating power to push hospitals and doctors to accept lower rates so you don't get stuck paying full sticker price or Charge Master price. Of course, many do not think insurance is on their side in the United States. And to understand why they don't push harder to get lower rates for you, you have to understand how insurance companies make money. Insurance companies in the US are regulated by something called the medical loss ratio, or MLR. It says that they have to spend about 80% to 85% of the money that they collect from premiums on medical care and health-related costs. The rest, about 15 to 20%, they get to keep for admin, marketing, and of course, profits. On paper, this was meant to stop insurance companies from taking too much in profits from your monthly premiums, but it actually created a weird setup. Now, of course, every insurance company would deny this, but because their profit is a percentage of total premiums and premiums rise when medical costs rise, their total dollar profit can actually grow when healthcare spending goes up. But not all insurance companies are the same. There are some that do not try to game the system as aggressively to try to maximize their profits. This leaves us with 2 big questions. Is insurance still worth it? And what can you do if you get a $26K saline bag listed on your hospital bill? If you have work insurance in the US, you've probably noticed that it's getting more expensive every single year. Maybe you have to pay for it, or maybe your company decides to pay for it for you. The data says it's gone up 20% in just the last 5 years. Now, your boss doesn't want to force you to pay more because you're probably going to leave to somewhere where they pay for it. So what many companies do is they say, let's just increase the deductible. That way the prices stay close to last year. Basically, it's a worse plan, but you're gonna pay about the same as you did the year before. The result though, for a single procedure, if you have a high deductible, you might pay more for the MRI than it's actually even worth because of this system. So is insurance even worth it? I think for most people that aren't ridiculously wealthy and have work insurance, it's probably good as bankruptcy protection. For relatively routine stuff like that MRI, if that's all you need, you might actually get a better deal by just negotiating a cash price up front. But if you need anything after the MRI, you'll definitely wish you had insurance, especially if it's for something like cancer, which nowadays can cost 7 figures plus. But what happens if you do get charged for a $26,000 bag of saline? What can you do? 3 things. First, ask for an itemized bill. This forces the hospital to justify every fat finger error. Sometimes suspicious charges magically disappear when they get put in writing. It's rare, but it does happen. Second, if it's still there, look up the fair market price. If they're charging $26K for a $10 bag of saline, use that data as leverage. Third, call your insurance company to dispute the claim. If that fails, ask for a patient advocate. The main point here is don't just accept the first bill. Make the hospital and insurance company fight each other and not fight your bank account. If you found this video interesting, you'd like to see more like it in the future, please consider subscribing for more. This is Tyler Detchover. Thanks for watching.